seems to be a very news-heavy day, given the fact that this morning you had the news that you will have the tariffs on Mexico, China, as well as Canada take place and take into effect, and that exactly that's happened. You have the White House that has put out a statement saying that the tariffs have actually gone ahead and come into effect. And now on the bottom of your screen, as you can see the flashes, you have China that has announced additional tariff measures on US goods. What they're saying is that they will be imposing additional tariffs of up to 15% on some US goods, as well as they are going to be imposing tariffs on US chicken, wheat, corn, cotton, as well as fruits, vegetables, dairy products being some of them. They've also said that they have asked Illumina Inc., DNA sequencing company, not to export the gene manufacturing product in China. So these are some of the developments coming in as we speak, where you have the China Commerce Ministry saying that Illumina Inc. seriously hurts Chinese firms' legitimate rights. They're saying that they're welcoming foreign firms' investment into the country as always. So this is a developing situation, and you're the markets that are actually reacting to this developing situation. So we'll get a view from Balasubramanian, who is the Managing Director and CEO at Aditya Birla Sun Life AMC. Thank you so much, sir, for joining us on the show right now. We also have Seth R. Freeman also joining along with him to talk about the repercussions of this on the global front as well. Thank you so much, gentlemen, for joining us on the show. Bala sir, let me come first to you and take your view on what's exactly happening in the Indian markets, given the fact that, yes, we have been seeing a sharp downtick in the markets over the last 5 months. Last 5 consecutive months, we've seen a downtick in the markets, and month of March also is not looking great. How should investors actually position themselves?
I think the last 6 months fall, I think it was on the back of series of concerns which is being expressed. One started from high valuations. Indian market has been one of the best performing market across the board. Indian markets have done well respect to the market cap, and having seen a significant rise, there was some expectation that this valuation is not sustainable if there is a slowdown in the overall momentum and the growth momentum. And in fact, the market initially, the corrections which came on the back of one slowdown in the Indian economy itself, because the Reserve Bank of India monetary policy authorities have been advocating a slower growth in terms of lending growth. That had its own impact, and government not spending enough in the first 9 months of this financial year also had its own impact on the growth momentum. Therefore, the valuation came under the question mark, and we started seeing fall in the overall market in terms of valuation being corrected. But I think post US concern on Trump tariff, etc., I think we got the added pressure on multiple things. One, of course, tariff creating uncertainty on the global trade and how the entire currency will shape up. In fact, there was a concern about currencies. If the US dollar becomes stronger and other currencies become weaker, that also led to some kind of fall. But I think the way I see is whatever the concern which was there from valuation point of view now got corrected. Now the forward PE multiples is roughly about 19 times, which used to be somewhere around 26, 27 times. So there is a significant correction that happened. And there has been a significant drawdown in the various companies in the across the board, also in some sense making it market relatively better to invest on the basis of valuation. At the same time, post the government budget recent announcement, they have taken some steps to get back on growth. One, step up the increase in the government spending, which of course now already started seeing momentum. In fact, the last quarter, the GDP number was actually higher than the previous quarter. And having stepped up the focus on spending, they have also stepped up the focus on increasing the consumption demand in the country to go up by making large pool of people to go to the tax net, which essentially means more money in the hands of people. These are the steps that are being taken from the longer term fundamentals point of view. I think what currently we are witnessing is the volatility, with the worldwide volatility linked to the Trump tariff things. But I also presume that market knows a little bit ahead of time in terms of price correction. That's why what I feel the correction that we have witnessed is largely, I think, pricing in most of the uncertainties it has been created. I would say we are on the last leg of uncertainty.
That would be great. It would be music to a lot of people's ears. We'll talk more on that. Bala Sahab, before we hit the break, you did mention the fact that we should see the end of this sort of a volatility or correction soon? How soon do you think that we should see this correction ending? And also, which are the sectors that are looking good? Are you also in the camp that feels the financials are looking pretty good right now, and one should actually look at this one very closely?
I think the way I see, having seen a significant fall in the last 2 3 months, and also probably I would say the Trump tariff thing is now reaching its climax of finally getting disclosed and getting discussed, and I think getting frozen as well from the implementation point of view. And what you talked about earlier, China also reacting. So they're all now coming almost to the climax as far as these tariff discussion concerns. What impact will come post that? Only time will tell whether it will lead to an inflation increase and so on and so forth. There is one thing seems to be emerging is I think the monetary policy authorities, especially US Fed, probably would look at cutting rates, and therefore that would have some positive impact from the flows point of view. I'm also expecting, having seen a significant flow of outflow from foreign institutional investors last year, I will probably see as interest rates get settled down at lower level in the US. We are already seeing some sign of that happening. Then we should also see the reverse of flows coming into India. Maybe another 2 3 months, I think that should start coming in, I would say. But probably I would say the current volatility during the month of March, for a variety of reasons, because March is also year end for everyone, tax planning, everything is there. Therefore, March could be a critical month to weather around the current volatility, and post that we should see some stability returning to the market. But having said that, in terms of sectors, definitely I think I've seen, if you look at the private sector banks, have underperformed big time for the last almost 1.5 to 2 years, except a few exceptions. Even public sector banks have corrected quite a lot. And the banking and financial sectors, given the fact the last 4 or 5 years they have gone through their own challenging period, and the recent monetary policy signals of cutting rates, as well as now making banks actually to focus on lending growth, they will probably start seeing actually the growth coming back in their balance sheet. As the lending growth starts coming back from the banking system point of view, it could not only, of course, unlock value for the shareholders, it could also lead to the multiple sectors who have been largely got hammered in the last few months, may also get their growth momentum back. That's what I would say. I think it's all about function of government spending gaining more speed, and private sector spending in any case has been there for the last almost 1 year. We are seeing increased private sector spending. I think all these things should lead to the GDP growth starts reflecting in the numbers. Therefore, the banking sector is a proxy to the economic growth. Therefore, the banking sector could be the one which could lead the momentum.
All right, Bala sir, thank you so much for taking the time out and speaking with us and giving us a sense that what's in there for the markets right now. And like you rightly mentioned, is the banking space that can actually do pretty well. And today, of course, it's Nifty Bank that is still holding on to that green territory. 145 points of gain is what we are seeing on that particular index.
If you like this video, then like, share and subscribe to ET Now.